Hey everyone, and welcome back to another portfolio update for today. So over the past week, the couch investing portfolio was up 4.65%, whereas the S&P 500 was up 0.64%. Year to date, we are of course outperforming the market quite considerably. We're up already 27.18%, whereas the S&P is up 7%. And since the start of the portfolio, we are up 103%, whereas the S&P is up 26.33%. And so in today's video, I'll talk a little bit about my strategy going into this earnings season, Tesla weekly insurance numbers from China, and of course the company that will report their quarterly figures over the next couple of days. And quite funny. And the companies that will report over the next couple of weeks. We'll also have some market-specific data that I think could be very, very useful to know. And of course, I'll touch a little bit on Intel. All right, so first up, a quick overview of the upcoming earnings week. We have, of course, on Wednesday, two big hitters here. And by the way, first episode after reaching 100,000 subscribers. Unfortunately, I have a fever at the time of making this video. You have no idea how hot I am right now in both ways, I would say. Not bad, huh? Not bad. I know. Anyways, thank you all for the support, right? Throughout the last 5 years, and especially over the last couple of years, it's been amazing. Nothing will change. I'll just continue to do what I'm good at. Hopefully you enjoy the journey. Over 100,000. Let's see where we can go with this. So anyways, on Monday, we have Verizon, Domino's Pizza before the market opens, after hours, not that many companies that I follow or know of. On Tuesday, you have some big hitters here as well. Lockheed Martin, Coca-Cola, Intuitive Surgical, SAP, Enphase, General Motors, RTX, and Texas Instrument, by the way. All of that on Tuesday. Then on Wednesday, big day for me, right? Big day for me. Not only do we have Tesla, but we have, of course, my new darling, Google Alphabet reporting after hours, ServiceNow, IBM, Chipotle. We also have AT&T and Fiserv or Fiserv. I don't know. Some of you say it this way, some of you say it that way. Whatever. They report Wednesday before the market opens. And then on Thursday, we have, of course, the one and only Intel after hours. I think it's going to be a weak quarter, but a big earnings call. So that's basically what's happening over the next week. This is probably the meme of the week. I've seen some very, very funny pictures from this event. Amazing. Anyways, moving on here. So over the next couple of weeks, of course, I can put my face here, the top right corner, because that already happened. But a week after the one we have right now, we have, of course, SoFi, PayPal, Spotify, Visa, Boeing, UPS, Meta, Microsoft, Robinhood, ARM, Lam Research. I mean, all of the big tech companies and all of the big companies that we follow and cover are going to report over the next 2-3 weeks or so. So it's going to be a very, very busy couple of weeks on the channel. You'll of course get a full summary video, and probably we're going to do, Jose and myself, some live streams as well. Now, before talking about the portfolio, it's important for you to know, let me put myself here, it's important for you to know where we're at right now. In the thumbnail, you've probably seen, right? Fear, greed. We are now pretty greedy in the market. The S&P right now is at a pivotal spot right here on a technical basis, right? We can break out, we can have a fake breakout and then a dump, or we can have a dump because, well, it is earnings season, so a lot of things can change, but we are here in a pivotal moment. If we look at what has happened in the past when the S&P 500 was above its 20-day moving average for 59 days, this is what has happened a day later, 2 days later, 3 days later. Doesn't really look that great. Basically, the odds here for once are not in our favor, right, over the next couple of days. But if we look at the next couple of weeks and months, well, the further out we go, the better our odds, because, well, the market will probably correct itself in the short run, and then we'll just continue the trend on the way up in the longer term. So yes, the market, in my opinion, is pretty heated. And as I've said last week, and I think a couple of weeks ago, it is okay, right? If you have high-flying names, it is okay to take profits. You don't have to close the position, because not closing the position, and I've made that mistake before, not closing the position means that if the stock does go up, you continue to enjoy that bullish ride. If it does not go up, you of course take a smaller hit because you've just increased your cash balance in your portfolio. Now, if we actually look at the portfolio, some things did change. So SoFi is still number one, great performance from that stock. Number two is now actually Google Alphabet, but funny enough, over the last couple of days, Rocket Lab was actually my second largest position. And well, that's normal when you're up 787%. Makes sense. And so, yes, I did take some profits from Rocket Lab. We're taking profits, leaving the rest for the ride, and we'll buy back as much as possible if we do get a pullback. I'm optimistic, but I'm not a greedy person either. So that's why it's still here at the top. I still have a lot in that position. And if we get a dip, right, for one reason or another, I'll take advantage of that. And if not, still 8.56% of the portfolio here. So I don't mind. That's the beauty of taking profits. It's my situation. Your situation can be different, right? Let's say you're quite close to retirement age. Why wouldn't you take profits if you're up 100, 200, 300, 500% or so in your position, right? Isn't this supposed to make your life easier for you to enjoy the life, right? That's where investing. You should enjoy it, your family, your friends. So yes, taking profits makes total sense. Nobody got poor by taking profits. Just remember that. Very important. Then, number three, still PayPal, still up 21.5% here. Rocket Lab 4. Micron, despite the small dip, we're still here at number 5, up 27%. Number 6 is AMD, up close to 50%. Uber sits at 41%. Nebius up 108%. This one I really hope it comes down, but unfortunately, every time I say it, it just goes up and up and up. Then we move on to Alibaba. Alibaba, I still think it's undervalued. I'm happy I added to that position the last couple of weeks. It is making its way back up. Then we have Intel. So Intel, I'm still down only 6.3%, but I am down. It's 5.4% of the portfolio. Intel is reporting on Thursday after the market closes. And this is basically what the company has guided for. Revenue between $1.2 to $12.4 billion, so quite a big range here, down $1 billion year over year. Gross margin 36.5%, down 2.2 percentage points year over year. I do still believe this is non-GAAP. And then EPS flat, basically $0, down 2 cents year over year. Looking at what the market is expecting Intel to report, revenue coming in at $11.88 billion. EPS, let's see if it close to, EPS of 1 cent. So the market is a bit more optimistic here. EPS of 1 cent. Free cash flow, still a loss here, of course. So let's see if they can beat. The bar has been set quite low with Intel, right? The bar has been set quite low. Year to date, I do believe that, the stock is still up year to date, around 14.6% or so. Market cap, $100 billion. I mean, yes, there is no trailing PE. Yes, the forward PE sits at 108.6. But do remember, there are a lot of restructuring one-time charges going on at Intel. The turnaround story is still on. The question is, when are we actually going to see some positive impacts? Don't forget, Libutan came in. He's very, very aggressive with his moves, and I like it. I think that's necessary for a company like Intel. You might think I'm crazy, but I do still think that a very good Intel is worth way more than just $100 billion, might even be worth a couple of hundreds of billions of dollars, and that's why I basically own it. I still think that this company, even if it doesn't become the next NVIDIA or the next AMD or whatever, you steer this company in the right direction. You have the design side of things and the foundry side of things. I think you're getting here a company that's going to be worth 300, 500 billions of dollars in the future, if, of course, it works out. That's the bet I have right here. Moving on here, we have the cash position, which of course has increased a little bit. We're now at 5.38% of the portfolio. And then we have DLocal. So DLocal, I'm still up, but not by much. It's close to 5% of the portfolio. And as I said, I will like to increase. I wouldn't mind increasing that position. Right now, going into the earnings season, I am being very careful with what I add, because if we have an overreaction with one of those names, I do want to have enough cash to jump in and buy more. I still think that DLocal will go much higher. Since I already have a position, I don't mind waiting until the next earnings report and earnings call. Even if the stock goes up, I don't care. Like I said, I have a position. I still view it as undervalued. I still view it as a potential multi-bagger. Why doesn't the market respect it? Well, because there were some questionable quarters last year, right? Margins were coming down, gross profit was down. Now we are seeing that recover. The market's probably waiting to see, can it continue to recover? If we're getting another quarter where it is recovering, if they are more optimistic in guidance, then I do think that this company will move. Don't forget, DLocal is a company worth just over $3 billion, enterprise value $2.5 billion, revenue $778.3 million over the last 12 months, but it is expected to grow that revenue compounded over the next 2 years, 26.8% and EPS growing 21.6%. It's a very, very profitable business that is growing quite quickly, small market cap. And so, yeah, to me, it's another one of those no-brainers. Yes, I would like that position to become a bit bigger, but I do think that as the stock does go back up, because remember, the stock is still down close to 60% in the last 3 years, as it makes its way back up to $15, maybe $20 eventually, it will become a larger chunk of my portfolio naturally. Now, since I don't own Tesla anymore in the public portfolio, the weekly insurance number in China came in at 12,300. Nice little increase, but of course, it was the start of a new quarter. As you can see, same quarter, well, same week last year, we had 6,500, so last week was a bit weaker. But now we've made up a little bit of the difference here, 12,300 compared to 11,400 same week last year. So pretty good all in all. Moving on here, we have Meta. Now Meta, you might say, oh, but wasn't Meta your second? Yes, Meta is my second largest position in the core portfolio. And just like Tesla, I wanted to have Meta as well in this portfolio to have, well, in this case, in Meta's case, to balance it out. Because I do acknowledge that a lot of these names are extremely volatile, smaller companies, which now of course have become bigger companies, but I do like to have like a Meta, a Google Alphabet, right, in that portfolio to make it a little bit more stable. I mean, it is 4.85% of the portfolio, already up close to 48%. I still think that Meta will knock it out of the park. The question is going to be, well, free cash flow margin, right? Are we going to get hit the same as 2022 with all of these investments in AI, poaching of talents, etc., etc.? Remains to be seen, but hey, if we get an overreaction like in 2022, I'll jump in and buy as many shares as possible, and that's why it's basically the second largest position in the core portfolio after Amazon. Then we have Appcelera, very, very small position here, speculative position 1.62%, up now 15.79%. Then we have, of course, the two new additions, right? Two new additions from the healthcare sector. Again, small position. Yes, I'm already down on both of them. Oscar, I'm actually down 22.5%, and United Health 6.3%. Like I said, United Health, I did a video about that, by the way, July 29th, guidance earnings report. I think that's going to be a stock mover, and then we'll see. And then we'll see what happens with that. I don't plan on owning this thing for many, many years. Basically another recovery play. As for Oscar, since that one is a much smaller company that is expected to grow still quite rapidly, but it has some question marks around it, it still is just 1.14%, but I wouldn't mind adding more once I get more information. So that's what we got right here. Then we've got Owlet. I was as surprised as you to see Owlet up, well, at one point almost 100%. Now it's up 87.16%. And then we have, of course, our 2 shares of NVIDIA and our 1 share of Palantir. Now, you might also remember that Jose and myself, we also had a little YOLO bet, right? We bought a little bit, I think 600 shares for me, 650 for him of Applied Digital. Of course, I don't want that position to, well, ruin anything that happens in this portfolio. So that's basically in a YOLO portfolio. So whatever happens with that, happens with that. It will not affect the performance here in a good way and in a bad way. Same with Iron, same with Cypher, and same with Open Door, which it's quite crazy to say that Open Door, yes, my $1,000 turned into over $2,000 in the last couple of days. Pretty insane, and that's why I do want to talk about the possibility of a pullback, because it does seem like the market is running quite hot. If we look at the large speculators' net position as a percentage of open interest for the Russell 200, look at how low we're at right now. If we look at, for example, the Nasdaq Daily Sentiment Index, pretty high here, and all of that, yeah, is not that great, right? It's not that great. I mean, we all acknowledge that the market is quite hot when we have, even my positions, right? Even those YOLO bets, when these things are up 20, 30, 50%, either for the last couple of days or even on one day, yeah, we do get that sentiment, right, of flashback, ooh, 2021, that's not good, right? That's not good. If we actually look here at, let me remove myself because it actually went higher and higher here, ratio of the market value of the 5 biggest stocks to all small stocks combined, that's the market value of the Russell 2000 index. Look at this, all-time highs right now. I mean, it makes sense. On the one side, it makes sense because, well, a lot of these big companies, I mean, they're pretty strong. And like I keep saying time and time again, right, your cool AI startup idea can be a Google feature. And I think that's what's going to happen right now with a lot of these smaller companies. Either we open the gates for a lot of M&As, or eventually a lot of these companies will just lose their key employees and, well, close their doors. And so you might ask yourself or me, okay, so why aren't you taking profits across the board? Very good question. And the answer for me is very simple. I don't see a lot of extremely overvalued names in my portfolio that are high up there, right? Yes, SoFi is up a significant amount over the last couple of months. Yes, does that make it extremely expensive and overvalued? In my opinion, no. Google Alphabet, I don't have to explain that I still believe this is one of the most, well, no-brainer plays in the market, so why should I take any profits from that? PayPal, same story there. Risk-reward-wise, makes total sense, extremely undervalued. Rocket Lab, yes, I did take profits there because it is very stretched, it is very expensive, and there are still a lot of things that in the short run can not work out, right? Like the neutral launch being delayed or anything bad happening with that. But eventually, I mean, I bought this company because I thought that this company could turn into $100 billion company. So I might say, okay, so why are you taking profits? Well, I'm taking profits because, one, I still have a position, and two, because I'm not greedy. Plain and simple. Same with Micron. I view Micron as still very cheap despite the stock doubling since the April lows. Company is still doing what it should be doing, so why should I sell? AMD is on a hold right now. I don't need to chase AMD at the moment. It's on a hold. Same with Uber. It's on a hold. I don't view it as extremely expensive. I view it as a hold. Then Lebius, of course, I'm already up double on that position. So here as well, I don't mind if it pulls back. I have my little cash pile right now. I don't mind if it pulls back. I invite a pullback. If it doesn't happen, it doesn't happen. It's still a small position, right? It's still a small position to me. I do want this to grow into a much larger position. Alibaba, still cheap. Intel, turnaround play, speculative. There's no reason for me to sell any shares of Intel at the moment. DLocal, I've explained. Meta, same thing here. Then for the rest here, they're just too small for me to even care about what might happen if they go down more or not. So that's my case. Of course, if your portfolio is filled with high-flying names that are extremely expensive, and yes, I'll even say a Palantir, for example. I think, yes, Palantir can be a trim. You might say, oh, you're just saying that because you don't own it and you sold too early. I don't think that going from $7, $10, $12 to $70 is going too early. Yes, okay, I could have made more money, but I've made a significant amount. Now, even the biggest bulls can admit that $150 per share, what is it, $300+ billion in market cap, does not make that much sense. Fully agree that this company has elite margins, growing quite quickly, but still, how expensive can this thing be? So it's up to you, right? It's up to you. Again, nobody got poor by taking profits. That's all. And so all in all, that's about it for me in this video. Hopefully I'll see you tomorrow during the live stream, and definitely on Wednesday after hours, we're going live for the Google and Tesla live stream as well. So basically, I'll see you each and every day, like always. Thank you all for your support. See you all next time. Bye-bye.